Hi, welcome to the panel. We're just going to give everyone 10 to 15 seconds, maybe a bit longer, just to make sure everyone's filtered in before we kick off proceedings. Forgive me if I don't smile for the entire 15 seconds while we wait, or indeed play any elevator holding music. Okay, nice. That seems like a good enough grace period. Then I'll say hello, good afternoon, morning, and evening to everyone watching, and welcome to this this panel discussion at UK Fintech Week, tackling the topic of payouts, entitled "Payout Performance Without Exception." My name is Alexander Hamilton, and I'm sorry to disappoint you, but I'm neither the topic of a Broadway musical nor a BBC weatherwoman. Though I do hope to someday defeat both of them in the SEO rankings in Google, but we'll see about that. I am in fact Deputy Editor at Fintech Futures, and I'll be your moderator for this panel. Joining me are Wolfgang Bardorf, Group Head of Treasury at checkout.com, and James Herbert, CEO at Hasty. We're going to be talking about the importance of payouts across the financial services sector and why security, speed, and convenience are all really important factors in ensuring success. We have about 30 minutes of discussion to tackle the important topic. And then after that, we'll have 10 to 15 minutes of time for your questions. So always feel free to type them into the Q&A box, and we'll do our best to answer them at the end of the discussion. But I'm sure you're already fed up with me, so I'm going to let these fine gentlemen introduce themselves and their firms. Wolfgang, perhaps you'd like to go first.
Sure. Thank you for attending. Thanks for hosting, Alex. My name is Wolfgang Bardorf. I'm the Group Treasurer at Checkout. I previously was the Group Treasurer at Revolut, and before that, background actually originally in technology, spent about 10 years in technology, and then over about 10 years in Treasury at Goldman Sachs at various locations around the world, and Deutsche Bank.
Great. James, you want to go ahead?
Hi, yes, James Herbert. I'm the founder and CEO of Hasty. At Hasty, what we're doing is we're enabling people to withdraw, to access their earned pay immediately. And we also provide the resources, budgeting tools, education, etc., to help people make better financial decisions, and also cashbacks, rewards, etc., to help their money go further, ultimately driving productivity through financial fitness and financial health. Prior to that, I founded my first business while at university called Brightsparks. It's just gone on to employ about 20,000 people, which is where I saw the need for people to access their own pay at the coalface there. And I was also, I spent a brief stint as an investment banking graduate, worked in Lloyd's of London, and have been involved in a couple of other startups as an advisor and investor. So, but mainly involved in running my own things, which is great news.
Excellent, and thanks to both of you for joining this panel. First up, with the introductions done, and without further ado, we're going to start with a scene setting question. So while fintech has changed so much and innovated plenty of different verticals across financial services over the past 5-10 years, why is it that when you speak to some people, some businesses, that late, inaccurate, or missing payments or payouts are still a particular problem for them even today? Wolfgang, do you want to kick that one off?
Sure. So, I mean, the way I would think about it is payments, and payments ultimately means somebody wants to pay somebody else. There's a transaction involved. It's super important to sort of the way our society functions. And if we were to compare it with, let's say, snail mail and basically email, nowadays the expectation is everybody can send an email from A to B. You will get there, we get there reliably, we get there quickly. And it's actually amazing that if you look at the payment space, that is only something that's starting to emerge now. If you look at the fintechs facilitating that, and it's actually something that customers, and James will surely talk about it, are definitely demanding of basically companies that provide payments. And so if you were to look at the flip side in terms of what that means is ultimately, if a transaction doesn't go, if a payment doesn't go through, it means that ultimately the transaction might fail. So in fact, I had a personal case where in December, my wife wanted to buy a cat, and she called me and said, hey, I can't buy this. And she was basically at a private seller. She called me and said, I can't buy this cat because the money that I've sent across hasn't arrived yet. And she calling me up as a treasurer trying to fix that, basically. But I think that's just a real life example of how even for really, really simple transactions, in the end, if the money isn't there, the transaction doesn't happen. You can have repercussions. In the case of that cat, she told me somebody else might end up taking the cat, and we wouldn't get it. So immediate consequence there. There's also a trust issue, I think, because I've told you I'm going to pay you, and then you're finding out that you haven't been paid. But what happened here? Do you not have enough money? It's a liquidity issue, and so on. And so ultimately, that spans really our day-to-day life, especially with COVID, online life as well. And if payments don't happen, that will have impact on people's finances and on people's liquidity.
Excellent. I think that example is a fantastic one about the cat. Unfortunately, I live in a flat, so I'm unable to get a cat, although I'm an extremely cat broody person. So definitely that one registers very deeply with me. But I think that payments in particular is something that, especially when you look at digital payments as well, is something that a lot of people just sort of expect to work. And I think that, when we wrestle with technological questions and topics, we sometimes forget the crucial part of the equation is the customer at the other end who's staring at their phone wondering why a transfer hasn't gone across. So like what are the stakes sort of involved for them at the end of the day? Sometimes the picture can be lost. So how do late payments and payouts impact those people? James, this is probably one for you to tackle.
Absolutely. You're in good company buying pets in lockdown. I think, Wolfgang. We also bought a couple of kittens in autumn. The problem is real, though. It's not just buying pets, it's buying essential goods. And we give people access to their own pay. And one of the things that we've found is that people need the money there and then. And you're right, the evolution from snail mail to email. But I think through the payments world and fintech world, there's still a long process that we're going to go through, and the real development of the internet and technology and how it really affects people's lives. And we've kind of gone through the legacy systems of payments are kind of dialed up, if you think of it speed wise, and we're moving into the broadband era, and down the line is the future where the fiber, where everything is just instant. And we've still got that evolution to go through, but the payments evolution is lagging somewhat behind other consumer interfaces. I mean, if you think about it, it's crazy to think that I can get on my Deliveroo app and I can have a hot meal here from a top restaurant in half an hour. Yet if I try to wire through normal Zepper my euros to an account, it's going to arrive tomorrow. I mean, how is the world we're operating when that works? And as a result of that, the user expectations have changed. And you can have a situation where we had one of our workers, one of the users was actually, and we had a great bit of feedback from them, but they got to the cash point. Sorry, not the cash point, the checkout, buying some essential goods that they needed at the time, food and groceries and stuff, and they didn't have enough money on their normal debit card to be able to pay for it. So they're able to use Hasty to wire money to that card and then access that money. And while they were stood there and the queue was behind them, they were able to get what they needed, which at certain times is absolutely crucial. And that expectation's there. And by not having that, by not having reliable payments, by it not being quick, that would have a really big detrimental effect on that person's life and their family that they're going home and caring for. And another example is where people are using it, again, for getting to work. If they haven't got the funds to get to work, which is one of the biggest uses of Hasty. They're using it to wire the money to be able to get to work, then they can go there and earn more and so on and so forth. And it's a very positive relationship. If someone has a flat tire or a clutch goes or something like that, they've got to buy their train fare. Now, if they can't get there, it's a big negative effect for them. It has an impact on their earnings and their career and everything else, but it's also an impact on the employer. So there are real world implications to poor transactions, to transactions failing, to slow transactions, and it's something that we all need to address to give that great user behavior and meet the expectations that consumers rightly have for payments.
Excellent. And Wolfgang, do you think that that there is is there a disconnect between customer and company in these cases sometimes? If there isn't, what's stopping the merchants and on the enterprise side, especially, helping to connect customers up with cash that they need?
Yeah, so I think we talked here about basically the retail customer, the individual customer, and ultimately that's what everything should be based upon, and that's what James was illustrating. When then James comes to us, if you look at Checkout, we're a payment services provider, basically dealing with B2B. Ultimately, when I think about it from a treasury perspective, from an optimization perspective, and have that customer in mind, and again, sort of thinking about the fintech world today, that customer just wants to get paid, right? That merchant just wants to get paid. So the merchant is asking us to process transactions, and there could be different sources for the transactions, whether it's paying by card on MasterCard or Visa or American Express or any of the alternative payment methods. And ultimately, James just wants to get paid based on that transaction. He wants us to abstract that away from him. He doesn't want to become the specialist around payments. So when it comes to, I guess, the user experience from a payment service provider company point of view, it's about how can you make the journey as seamless as possible? How can you abstract that away so that whoever uses us can really focus on their core business model and don't have to worry about payments? Now, that actually means for a payment company and for a treasurer in a fintech, in a payment company, having to deal with all of that complexity and trying to abstract that away. And abstracting that away means building systems that can ultimately predict all the different settlements, but it also means being able to, where necessary, use our own money and find creative financing structures, basically, to make that happen. Because again, coming back to sort of the email example, when somebody wants to send an email, they don't, and it doesn't arrive, they don't want to get a long answer from the internet service provider in terms of saying, yeah, this didn't happen because it first had to get routed to the US and then that packet had to go somewhere else. Same with payments, it should be the same way, point to point. Obviously, it's not quite as straightforward because of the regulatory elements as well, and the legal entity elements when it comes to AML and so on, which of course are super, super important, and we have to cater for as part of those flows. But in the end, there's the question, how do we make that happen in the best way, so that then when James thinks about it in terms of servicing his customers, he knows he's got that reliability that I talked about before, reliability, scalability, speed, and James can ultimately deliver to his customers and not having to worry about those myriad flows.
It's exactly as you say. The payment space and the financial space, fintech space, is actually remarkably complex. There's a lot of moving parts to it. There's a lot of legacy infrastructure there that we're having to link into to ultimately try and delight that end user and give them the best possible experience. And the key with all of it as well is, you mentioned it in the first part of it, trust. We need to be accurate. People need to have real trust in what we do, because payments are not, a fad. They're not a nice to have. It's a need to have. We're dealing with people's livelihoods. We're dealing with organizations' livelihoods. And that accuracy and that trust is super important. And removing that complexity as we go through, if you think about sort of the supply chain within payments, the value chain, each element of that is effectively trying to remove that complexity for the next user, so that whoever that end user is, be it the shop, the retailer, or be it the end customer that's purchasing from that shop, or anything else in that, they're hopefully getting the simplest, most frictionless, best user experience with as much as possible of that complexity removed as a result of putting these different parts of the puzzle together. And a lot of the innovation is really thinking about how you can put together these different things, how you can reimagine what bits can we loop around, and how do we get there faster. and create a better user experience based on a combination of invention and development, as well as working on the foundations of the legacy infrastructure that we all have to operate with.
That's a really interesting point you bring up there, James, because I think that there's always a technologically and from a developmental standpoint, there's always this sort of three-pronged approach to everything, be it core banking systems, asset management, everything. It's do you build it, do you buy it, or do you partner? And I'm sure there are plenty of firms out there that are looking at systems to do with paying out on time, paying out when customers or users need it, and thinking like either this is going to be expensive, or we don't have the engineering capability right now, or we don't have the budget for it. So I think I'll go to you first, Wolfgang, with this. Like, is there a tried and true method for this of solving the equation, or is it a mixture of any of the three?
I think it's important to really look at your business model and business use case, because ultimately, if you want to optimize payments, the first thing that you need to have is really, really good data. You need to know what transactions are you processing, when are you going to get the transactions in, basically the settlements in, when do you have to make your payments out, in what currencies do you have to do that. And there is no real one-size-fits-all solution when it comes to that, because you know your business best. And so I think it starts with that, but then there are components certainly that could be brought in from the outside in terms of treasury management systems and so on. But I think it's very important to know that those treasury management systems are only really tools, and they support you. But in the end, it's you having to figure out, okay, here are the settlements I'm getting. These are the conventions. Here are the bank partners that we're using. But ultimately, it all has to get cleared through basically clearing systems and so on. There are cutoff times for individual currencies and so on, especially when you have to move money between bank accounts, you have to move money between legal entities. Again, all the stuff that we want to abstract away from our users. These are the things that basically one needs to think about as a treasurer, and designing that strategically, especially when you've got a blank piece of paper, and I think that's one of the advantages of being a fintech. Basically, having the chance to design that strategically is super important, and then you identify basically, as I said, the tools that you need and bring them in.
100%. And James, from your perspective, what's your technological journey been like, and what are the questions and answers you're getting from your own clients when it comes to this?
So I think it's finding the right mixture that works for you, and that is a combination of different factors: resources, expertise, vision, what else is out there. I had a good analogy for this. It's a little bit like, from our point of view, it's a little like we're building an office block. You start off with the foundations and the steel, and you put the brickwork in, and you build it up, and you've got to put the plumbing and the electrics, and ultimately you finish off with the interior. And then once it's up, you've got to then staff it and run it and manage the whole process. And obviously, because fintech's moving as quickly as it is, it's kind of like doing a bit of an earthquake as well, to add an extra challenge. But if you think of it in that process, are you the architect? Can you also do a bit of the building? Do you want to do all the bricks and mortar and the electrics, or are you going to get contracts in to do it? And that mix will be dependent on the skill set that you have and the time you have and everything else. But and I find a really interesting way to think about it and to convey that you've got to put it together in the right way. And ultimately, from our point of view, the bit that really matters is how the end user do it. Now, we obviously work with the likes of Checkout. We provide a great service, and we're able to sort of move money in the UK and internationally from where we are, which matters as well. I mentioned obviously the range. We're working a lot with the NHS at the moment and others, and there are a number of people that work within that want to send money from the UK across to Europe and beyond, and they can do that instantly via pay to card through Checkout. From that, we work. We've got the world's first Visa card that let people access their earnings on demand via that, effectively turning your accrued income into a current account. And there are all those different things, the different parts of the puzzle you put together, and how do you put those together ultimately to provide a product, that building, that is going to make people want to, engage with it. So it's a mixture, and there's no one size fits all for it.
Excellent. That's the answer that consultancies never want anyone to give, I think. But what do you guys think from both of your perspectives? I guess I'll go to Wolfgang and then James. What do you think are the aspects that are most often missed in putting in place a system that offers ease of use, an innovative sort of front office experience for the end user, and a secure transfer of funds? What do you think is the thing that people, when they want to put a system like this in place, they forget about, or there could be roadblocks along the way that need to be overcome? So what do you think is the most common bugbear, and how is it overcome, Wolfgang?
Yeah, so I think as you start, let's say when you are, I think to sort of use the analogy that James used, basically you're building an office building, you start basically with your building blocks and sort of scaling beyond that. I think often the focus is rightly on the product itself, but I think what is really important is do you have, coming back to what I said earlier, basically access to data in a scalable way, because ultimately if you want to improve payments efficiency, it's about understanding all those flows, almost getting to a point where you can predict the flows. So to say, okay, well, now it's let's say April, lockdown in the UK is easing. Will this mean there will be additional spend? And will this mean there's additional spend straight after that? But maybe there's also additional spend at the end of the month when people get paid. So there are all these cycles, and having that data, having ideally real-time information, so you can actually see the flows and so on, and also then make decisions on the spot is very, very important. And often, because sort of the transition from startup to scale up and then getting bigger, often that's sort of forgotten, because when you're doing this at a smaller scale, you can probably look at that manually and so on, and you've got somebody who sort of worked out the patterns overall. But when you really want to do this at an enterprise level, data is key, and really data is king here in terms of being able to do that. And so my recommendation would be, at least to any treasurer who's looking to optimize in that space, is make sure you get your data right. Make sure you're, coming back to what I said earlier, your use cases really, and then you build a scalable solution with data around those use cases.
I think I think that's you're absolutely right. And one of the key things for us, one of the absolute pillars that we base everything we do on, is accuracy. There's not margin for error with this. You can talk about, there can be a huge impact on people's lives, and there's also a huge impact to the balance sheet or the treasury to if there's leakages and things are wrong. Accuracy is super important in this space. One of the things that I've enjoyed, but I underestimated when I first started Hazy, was just the complexity of this space. There are so many different moving parts. There's really, interesting reasons why it's evolved the way it has, and how things are evolving very quickly around that, and new services, new ways of thinking about things. But it is a really, really complex space, and embracing that and trying to understand it and navigate it is really important, but always remembering that they've got that complexity. And then on top of that, you have local nuance around it. You've got regulation, and international regulation is varies a great deal. We're lucky in the UK that actually I think we've got a good regulator, and it's pretty clear. We've got some of the best financial infrastructure out there. We've had faster payments for as long as I can really remember, really, to be honest. Whereas instant SEPA is new, and if you look around the world, actually the infrastructure and the regulation is far more confusing and less well evolved than it is in the UK, which is one of the reasons why we've got this, the fintech hub that we are. But yeah, so working with partners that can actually support you on the different aspects of that you know, have got you covered on the nuance of very, very niche regulation for certain things, and that can support you with that. That has really helped us evolve and develop, and finding those partners that are able to consult on it and advise and direct and be really honest with you of, right, well, we've got you covered on that, but this doesn't work and you'll have to do that. And then you can rethink a new way of doing it, because you've got to be accurate, you've got to do it the right way, and you don't want to get it wrong, because if you've got the regulators coming after you, it's a good way of not getting there very quick and having to put the brakes on and not being able to delight your customers.
Yeah, I mean, I think that's a fantastic point. And it was you sort of you preempted me here, because I was going to ask a question about regulation, but a fantastic jumping off point. I mean, oftentimes the the most maligned adversary of both the innovator and the organizational procrastinator, regulators can, they can change the landscape, whether it's in the UK, where we have a lot of support, as you mentioned, James, or abroad, where companies sometimes, when they're trying to move outside their current jurisdiction, they might run into roadblocks. So, I mean, how do you guys view, obviously a very positive side of it there from James, so how do you guys view the current future regulatory environment in the UK and abroad, especially with what's going on with, perhaps changing rules with Brexit? We don't know whether things are going to be transcribed across properly or not, and the impact the provision of new technology might have as we move on to try and solve the payout problem. I'll go to Wolfgang first in this one.
Yeah, so I think regulation is often there for a reason, right? So there has been a history of obviously all kinds of issues, and just if I think back about my career, basically having gone through .com bubble and .com events at the time, then the financial crisis 2008. Regulation is there for a reason, and I think we need to embrace that as a financial services firm. Then there's the question, however, is regulation sort of keeping up also in terms of the cost benefit analysis, in terms of what basically customers need and sort of how society is evolving. For various good reasons, a lot of the regulation is focused basically on a country or focused on a legal entity. But as we've just heard from James, people want to transact in multiple countries, send money across boundaries, and so there's the question how to integrate the various, or how to think about the different regulations. So when you are operating as a global group, you have to know the US regulations, you need to know UK regulations, you need to know the European regulations, and make sure you build that into your model, coming back to what I said earlier in terms of understanding data, understanding constraints, and so on, whilst at the same time also having a dialogue with the regulators around how are basically forms of payment evolving, and I think, as James said, I think that's where the UK government, the UK regulators, I think, have been very forward-looking, and that's why we're benefiting from that, especially in the UK context.
I think very well put. I think there's two aspects to that, and you mentioned about how regulation keeps up, and we're going to be pushing ideas out there as fast as we can, and in a very healthy fintech environment, particularly in the UK and London, that we really are doing that, and the regulators working well with us. I'm sure Wolfgang and his team have got a very good dialogue with the regulator. I know we have with the FCA, but it goes beyond that, because if you're doing something for the first time, it's not necessarily going to fit, some of it's getting a square peg into a round hole. So you've got to work within the regulatory framework, but beyond that, you've got to work with morals and ethics. And in some ways, that goes ahead of the regulation, because regulation by its nature is going to have to be catching up, because you're evolving your product and service the whole time. But as an industry, if we're going to earn that trust, to keep that trust, and deserve to have the trust that we should have, throughout the stack, we have to operate with the highest ethics and the highest morals. And that for me is the bedrock. And as long as we can kind of self-regulate ourselves, self-regulate to an extent by operating within that framework with those ethical standards, then we will continue to have a good relationship with the regulator, and we can push things, we can try things, but ultimately, keeping the end user and their needs and the risks that they're exposed to front and center, and operating within their best interests would make a big difference. And that is the key to I think that blend of innovation as well as the regulation catching up.
100%. I think that I just want to remind everyone that you've got a chance to drop in your own questions into the Q&A box when you have a chance. I actually have a few questions of my own, because I wouldn't be a good journalist if I didn't. So I think my first one is that we've kind of seen that, or rather I've seen data from ING lately that points out that customers in some cases can be quite sticky when it comes to the methods that they receive and send out payments. I think that, for example, it's kind of adjacent, but it's that most customers either use PayPal or they use online card payments when they're shopping online, because that's just what they're used to. But I mean, I think this one I'm going to address to James in particular. Do you find any sort of friction when it comes to your product enables people to take out money from their pay packet throughout the month? Do you find any friction from the end users when they go, oh, I didn't know I could do this, or a lack of trust in that aspect, or even from the companies that you work with? Do they sort of think this is different and new? How are we going to sell this to our employees?
Absolutely, very good question. We're creating a new space where it's a new category, earned wage access or earnings on demand, depending on what you call it. And it's very much been an education phase for the time we have. But the end user, the worker, generally understands it and gets it quite quickly. I mean, we're still hunter-gatherers, and the idea of hunting and gathering on day 1 of the month and not getting paid till day 30, and not eating until day 30 is alien to us, because ultimately we would have starved to death, right? So, and it's the same with work. Why would we work on day 1 and not get paid until day 30? Because we've earned that money day 1, day 2, and so on and so forth. So the worker tends to get that, because that link between effort and reward really appeals to us at a functional level, a species level. And that's one of the reasons it drives really positive human behaviors, in increased productivity, reducing financial health. But one of our security customers has reported back that they've got a 77% increase in their Hasty users doing overtime. So that link is real, but it also builds a really healthy relationship as well between work effort and spending power, and driving that through budgeting and understanding. It's just a really healthy sort of relationship of how all the different parts interact. So that's key, and users have generally found that easier once they become aware of what it is. And different people are using it in different ways. We launched the card just under a year ago, and obviously that changes. People are tapping and buying their coffee and their tube pass, and just using it as you would a normal contactless card. But if you're looking specifically at the withdrawals when they're going in, while people were dropping into the app 10, 15 times a month, because they're using it as a budgeting tool to understand what they've earned in real time, they're withdrawing funds once a week, 4.3 times a month, which kind of makes perfect sense. And actually our studies that we've done and other studies have shown that actually budgeting on a weekly cycle is much easier for people to understand. So those user behaviors have kind of evolved, and the more people get very comfortable with it, they get it, because it works from that point of view. Because we work with the organizations as well, that's been more of a challenge. But it's actually only 61 years ago that there was a change in Act in Parliament that allowed companies to pay their staff on a monthly basis. Before that, it had to be weekly or more regularly in cash. So it's actually in a couple of generations that have been through that, and it's kind of institutionalized. But there is an education piece there, and it's an empowerment, and it's letting people make their own financial decisions. Now, they're allowed to vote, the vast majority of the workforce. Once you're 18, you can vote. Yeah, you can't choose when you receive the money that's already yours. It's kind of crazy. So there's an education piece, but obviously with that as well, companies have the corporate responsibility. There is a quite a maternal instinct often, or paternal instinct often, to how they operate, and obviously with products now evolved, includes more budgeting tools and financial education, because we want people to build a really healthy relationship with their work, with their pay, and also with us, with Hasty. And that's going to increase our usage and the value we can add going down the line and everything else. So, our incentives are aligned, and by operating in this space, we are all together, and we have a positive multiplier effect, ultimately making people more productive. That makes their companies more productive, which means more employees using Hasty and so on and so forth. But the education place has definitely been harder to educate the organizations rather than the users.
Okay, brilliant. And bring this obviously onto your side of it, Wolfgang. Have you seen much friction from sort of the treasury side when it comes to the adoption of new products and systems and services? Is there a stickiness there? This is how we've always done things, so we should probably stick with what works, as opposed to try something new and dangerous.
Yeah, so I think naturally there's sort of the easy answer in terms of saying, well, this can't be done because this is how the payment systems function. There's a cutoff time for particular currency at this time, or if I wanted to do a transaction quickly. I think James alluded to, for instance, the development of instant SEPA. Before that, basically, it took a while to send money across, and so I think there is sort of that inertia around, well, this is how it has always been, and in order to get people out of that inertia, you really have to innovate. You really have to think hard, but also question the status quo and think again about this user experience. So I think you mentioned previously, people are used to the normal payment methods, for example. What will get them to change their payment methods? Well, it's something that either is much more convenient, much easier to use, much easier to understand, or it gives them some benefits, as James mentioned in the case of his product. If you think about this at a permanent payment services company level, and this is where Checkout, amongst others, have been quite successful, because obviously merchant acquiring has been around for many years. It is about how do you give companies control over seeing the flows, understanding their fees, and then ultimately coming back to what we've talked about here as well, abstracting a lot of that away in terms of that complexity, because James and many other customers of ours wouldn't want to get the answer from me and others who are saying, yeah, no, this can't be done because of X, Y, and Z further down that we're using. So we need to think harder, think about creating that better product. And in that case, as soon as you've got that, I think that's when you overcome inertia. And there's also this sort of tipping point around that. But if you've got enough people convinced and it's really working, then I think you see that multiplier effect ultimately.
I think we're also operating in a very risk-averse environment. This is money. The stakes are high. If you get this wrong, this is costly, and as you mentioned, has a real impact on the person whose money it is or isn't. So people are, understandably very risk averse about it, and it's having the opportunity, build that trust, build that credibility over time. As you roll out more products and more services and then expand your product suite, if you built real credibility and trust with your first one, they're going to trust you further on. So that helps, but is also, with all of these things, you have your innovators and then your early adopters and then the mass adoption, and each product and development is going to have that, and it's how do you get those innovators and those early adopters to be your ambassador and help you on that educational journey, and help them encourage others to use it, for those that are very risk averse to take that risk. And that is definitely a challenge.
100%. I think there's you almost got away with it, both of you, without being asked a question about COVID, but I'm going to bring one in. I was going to trying to frame this so it's not just what has COVID done, but Wolfgang, there you mentioned that you don't want to turn around and say to people this can't be done, but has it changed that that sentiment from this can't be done to this should be done? Because no, the landscape has changed now. We're and I'm going to use the word that I don't like using, and I'm relying on other people using, but we've had that digital acceleration, changes that were underway are now being accelerated. But is that the case now? Is it sort of there's an imperative? You can't hang about these days.
Yeah, definitely. I think it's a shift of the entire ecosystem. As you said, it might sound a bit like a cliche in terms of that digital acceleration, but the reality is it is happening, and therefore flows are shifting, needs are shifting when it comes to volumes, when it comes to speed in particular, in terms of ease of use. So if you went to let's say to a normal bricks and mortar shop, you could pay cash, right? And you also take into account, well, I need to potentially drive there, walk there, so I was sort of used to the fact, well, it actually takes quite a bit of time coming back to sort of this core principle of a transaction. Doing a transaction does take time, there's friction around it. I think what people have discovered now as part of that digital acceleration, actually all of that doesn't necessarily need to happen. Right? Think about sort of also the commute, let's say, to the office and back, sort of as part of friction. If you then translate it to the payments world, I think it just means the standards and the demands are so much higher. So I think it's not just about, as I said, can you do it, but should you do it? And in fact, must you do it, because our customers ask for that. And in order to stay on top of the game, we need to constantly think about innovating. Not innovating is just not an option.
Necessity is an incredibly powerful driver to get people to try things. And I think what it forced a lot of people throughout that value chain to do was actually rethink things, try something different, because they couldn't just do the same thing again. And guess what? Actually, some of the products and services that have been developed that they've been avoiding for those risk reasons, because they're risk averse, that when they tried them, they went, no, this is better. This is an improvement. So it accelerated that learning and that experimentation phase. It kind of made more people early adopters, and then it sped up that curve in a number of different products and services.
Okay, great. Well, that actually appears to be all we have time for this discussion. But much thanks to James and Wolfgang for joining me, and thanks to everyone for watching and for coming along. I hope you enjoy the rest of FinTech Week and have a great rest of your week and a great weekend. Goodbye.
Thank you guys. Bye.
Thanks.
Thank you.
Bye.
Bye.